Sorry, I forgot about that. I forgot my mic was still on mute. So let's try this again. All right, now you guys can hear me. So good morning, good afternoon, or good evening, and welcome. Obviously, I am not Rob Roy. My name is Brandon Wendell, and I'll be here for the Power Hour for this week. And welcome, everyone. So there we go. Now I got everything up and running. Hopefully, you can see me and hear my voice. I was talking to myself there for a little bit. Forgot to change the mic over, but that's okay. So good afternoon. Yeah. Great. Anyway, today, yeah, like I said, before we get started, obviously I'm hosting Power Hour. Rob is on vacation this week. I actually just got back from vacation. I was gone for the weekend. So just getting back into the swing of things here. Just need to remind you guys that we are not registered broker dealers or investment advisors. We'll take a look at the markets, but looking at them from an educational standpoint. I'm not giving you any personalized recommendations or telling you to buy, sell, or hold anything. We are also got to be aware that the markets have risk, and no matter what we do, we can never eliminate the risk. We can just try to manage risk and make things better for us. Um, anyway, we also are not subject to trading restrictions. We can have a position of security to initiate one at any time. So that being said, we have a lot of workshops we do on a regular basis. You can see some of the list of them here. We got the Wealth with Spreads Q&A that's coming up on July 13th. That's this week. I'll be doing that. Inner Circle, we do that monthly. We got Monster Market Moves, Mastering the Trade, Trading You. Those are premium workshops that we do for our students. And every week you can join us here for the Power Hours, Mondays at noon Eastern. So you're here today. And again, you can go ahead and come back next week and the week after, and get some great trading information. So we also have Trading Coaches Playbook every Friday that's free for you guys to join. I'm actually in charge of the last three programs there, the E-Mini Think Tank, which I run, Monday, Wednesday, and Thursday from 9 to 11 a.m. I just finished that a little while ago. And we do futures trades where we identify opportunities and then practice, looking at we look at the live markets and practice our trading and figure out what to look at. It's kind of a nice trading community where we share ideas with each other. I share my education and my background and help to find high quality opportunities. I also put together the Wealth of Spreads program where we basically do future spread trading, which is a little different than what you're normally used to when it comes to spreads. Most people are used to option spreads, which I do as well in the SPX Cash Flow Secrets. That's another program that I run as well, where I put out a text alert every day for some iron condor opportunities on the S&P index options. But when it comes to Wealth with Spreads, we are dealing with spreads on futures themselves. So there's a lot of different programs out there. As a matter of fact, you can go to my website if you want. It's there's wealthmotorshq.com, but my personal website, brandonwendell.com, has more information on all those different programs that I run as well. So you're more than welcome to join us there or join me there. You can also follow me on Twitter at TraderBDub as well. And I'm on Facebook as well and YouTube. I've got my own channel. So lots of free information out there. Today, however, I'm going to be talking a little bit about a glimpse into the life of an online trader. And the reason why I'm bringing that up is, let's see. What else do we have here? Building options trader. Let's see. Yeah, there's the glimpse into a life of a trader. Really, it's an online trader is what we're doing. I want to mention that if you enjoy hearing what you're hearing today and you want to learn more about this, I'm actually going to be doing a full day of live trading interactive with people. And that's going to be in New York in October. So if you're interested, I'll put it into the chat. If it's not, let's see. I'm going to find the link right here. There it is. Copy this and put it into the chat for everybody. So I'll click on that link real quick. I haven't actually looked at the page yet. They just gave it to me, but no free room and board. You got to pay for that yourself. Anyway, you can see right here, a day in the life of an online trader order form. If you're interested in joining me, October 27th. I forgot what day. I think that's a Thursday, if I'm not mistaken. Let's see, October 27th. Yeah, that's a Thursday. And basically, I'm going to be starting off 9 a.m., I think it is. I can't remember if it's 8:30 or 9. It's probably in the form somewhere. But anyway, you can join me for a day in the life of a trader. It's a live experience. I'm going to be basically opening up what I do in a normal trading day with you, sharing a lot of my secrets and things that I do personally to find trading opportunities. It'll be kind of interactive, open Q&A as well as I'm going through it and giving you a little bit of a taste about what I do to find trading opportunities. So it'll be in New York. It's in Long Island, I believe. I forget exactly where it is. Does it say on here? It doesn't show, does it? I forget what the hotel is. Lee, do you have the information on the hotel? I thought there was more information. This is just the order form. So I got to find the other information on it, but you can always email us at support@wealthbuildershq.com to get more information on it as well. And again, that's support@buildershq.com. There we go. And then, yeah, I forget which hotel it is. Dang it, I had it somewhere. Hang on a second. You'd think I'd be organized, but no, I'm not. Not today. Anyway, there's my email, and get it to you in just a second because I have the hotel information. There it is. Long Island Marriott. That's where it's going to be. So there it is. And it'll be all day on the 27th. Okay, so another question. How often do I put out a new Wendell effect video? Every week. I will be recording it as soon as I'm done with this. Like I said, normally I have it released on Mondays. Mondays when I normally release it. If you're not familiar, if you go out to YouTube, I do a free video once a week and with some information about the market. So you can go out and do search. There it is, Wendell effect. It's not released yet. You can see that I've got the latest one was when last week's, I don't know where it is. Anyway, but you can see 627. And then, yeah, I release a video every week, usually on Mondays. But I'm a little bit late, so I'm going to get to it. I apologize, but it'll get there. I'll get there. So anyway, yeah, we'll do some events some places else, but we're going to be doing this one in Long Island coming out again, 27th. So like I said, becoming an online trader is kind of an interesting thing. It's not like any other career that I've ever prepared myself or did before. I kind of fell into this in a way by mistake. And I started off as a retail broker. And I did that after I got out of the military. I did some other things in the meantime, but eventually I became a broker thinking, try this out. This markets were really, really hot. This is back in the 1990s, late 90s, when you pretty much, if you watch The Wolf of Wall Street or Boiler Room, that Boiler Room was very similar to what I did. We were penny pushers, and it was just, it was hot back then. Everybody wanted to be a broker because that was the thing. That's how you made all the big money. And we were just calling people up, smile and dial, smile and dial. And eventually I ended up moving into back office operations. So I got into the trading world. From there, I ended up moving into working as a hedge fund trader and just did that for a little while, which is kind of fun. But that's how I got involved in trading and really figured out that I really enjoyed looking at the markets, figuring out what the markets are going to do and do the actual trading myself. So, like I said, I'm going to be going through my entire routine and kind of giving away all the secrets, if you will, of how I identify what to trade in the markets every single day. And let's see, let's take a look. This is a trade we were looking at right now. We had a little bit of retracement, but the markets are going sideways. And it took an opportunity to go short here on the NASDAQ, but it's not really doing much, unfortunately. We're just kind of going sideways right now. But yeah, I just took like I said, a day trade short here as we broke a Fibonacci. This is not my normal trade, but it was an additional trade opportunity we identified from these Fibonacci, basically impulses versus corrections. Let's see. On Doolittle Boulevard. Oh, your grandmother went to high school with James Doolittle. Oh, wow. That's crazy. Class of 1912. Wow. That's a small world. That's weird. Huh. Anyway, like I said, in order to be successful in trading, really, you can't just kind of like show up at your computer and hope for the best. You really want to be more organized. And I actually been looking into a couple of new tools, and I'm trying to find, I forgot to bring it up. I don't want to promote anybody in particular yet because I don't really have anybody that I'm working with, but I've been looking at a couple different journal softwares that are out there that are supposedly pretty good. I'm experimenting with them now to see if they're actually worthwhile to promote to my students, if it's going to be a benefit to you. But one of the things you need to do is not just figure out what you're going to trade, but once you have done the trades, figure out, okay, what went right and what went wrong and what can we learn from that? So for instance, today I ended up taking a trade on nat gas and it didn't work out. Not every trade works. So I can go back and take a look to see, okay, why did this trade not work? And that could be just as important as learning why certain trades did work. So if I bring up this trade area right here, I'll bring up my order bar, and you'll see this was the entry right there where that little blue arrow is. So I went long based on something that was going on here. This is my what we call opening range breakout strategy. And what happened in this case was I went long on a retest of the opening range, which is this candle right here. And unfortunately, as I go forward here, you'll see there's a little open triangle, and that's my stop loss. So I bought here, sold here. Obviously, I bought high, sold low, not what you're supposed to do, and therefore I took a loss. Well, the first thing I want to take a look at is figure out why did I take that loss? And again, there's journals and things you could do to kind of see if there's patterns in the markets. Are you losing when you do certain strategies? Well, obviously, then you got to figure out that strategy. It's not working, figure out which one does work. Or the time of day. Perhaps you just don't focus well first thing in the morning or later in the day, and you get to see these patterns developing only if you're journaling and figuring out what you're doing all the time. In this case, I think it was a trend issue. So here I am on a 5-minute chart, which is what I execute for the trade. And when I go to a 30-minute time frame, we figured out, okay, we don't really have a very strong trend. And if I'm going to go long, I need a strong bullish trend in which to go long. So if I zoom back out a little bit, there we go. We take a look and we can see that, yeah, we've had, these brief impulses, then a long correction, impulse, correcting, impulse. And unfortunately, I didn't let it correct long enough. And you can see it eventually kept correcting down. It probably will bounce. And I believe this was the second trade opportunity that I had. Let me just check real quick. As I mentioned, E-mini Think Tank, what I do every day is I bring up trade ideas. Again, part of the planning before I get to I'm kind of skipping around a little bit, but in the live session I'm going to be doing, it's going to be in order, and there'll be some manuals that go along with it, kind of walking you through the course of a day, what step by step that you should be doing, and helping to create your own personalized plan for attacking the markets, figuring out what to do. So today I'm just giving you little glimpses of things that I do, but again, on the 27th, it'll be all in order. So what happened was the trend was not necessarily the best. Number one. Number two, good question. Could automation of this have handled it differently? Possibly, because I would have to score the trend in a certain way. And if the trend did not score well enough, then it would have skipped the trade idea altogether. Okay, so it wouldn't have gotten me in to begin with, and therefore I wouldn't have lost. Now, what I was hinting at was when I take a look at the markets here, there it is. Let's see, do I have this one open? Where'd it go? There it is. E-mini Think Tank. As I said, every day before the class begins, what I do is I bring up something like this. I go through my little disclaimer, and then I bring up, these are the trade ideas for today. And it's from today because today is Slurpee Day. So these are the actual trade ideas. I'm giving you some freebies today. But basically what happened was today is 7-Eleven, right? It's actually the 95th anniversary of 7-Eleven as well. And so I put up the Slurpees there because if you go to 7-Eleven, I think everybody gets a free small Slurpee today. Anyway, I heard that on the radio, so don't know if it is. A better day to be at the crap table? Maybe. So anyway, I identified, you can see there's QG, that's the nat gas trade on the 15-minute time frame, but there was the additional trade strategy that I had found on the opening range. And unfortunately, as I showed you, on that opening range, we didn't have a very strong trend on this time frame. It was a bit choppy. So going down to the 5-minute chart, I took a small loss, $125 loss rather than the $400+ gain. No big deal. It is what it is. But even with this particular trade that I'm identifying now, because this one was the one that didn't work out, that was a strategy. Delete everything out. There we go. The other one that I presented was a 15-minute chart right here on the QG. Okay. And I was looking at a long opportunity with identifying my loss for $200 and my win, if I'm right, for $950. Well, if I go to that QG, I have it right here, 15-minute time frame, 6.1310. You can see it's right here to 6.370. So I go from 5-minute to a 15-minute time frame. There it is. And we have not hit the entry for that trade yet. As a matter of fact, there was another trade in the meantime, I think. Yep. right here, another area of what we call demand. Now, in the class, I had identified both of these areas. Oh, this wasn't the opening range, actually. Yeah, that's right. This was just an opportunity, perhaps, to capture a pullback in the impulse to the upside. And again, it hit, but it just didn't hold because this was not a real quality opportunity. It didn't meet the criteria for a trade and also not for a zone. So not only do I have to have strategies for individual trades, but I have overall rules that I follow as well. Okay, so when I trade, and again, I'm going to show all this in order as I teach it in the live day. But typically, when I'm trading, I have 3 time frames that I'm always going to focus on. I have what's called my perspective time frame. Actually, I'll type it all out. And that I'm kind of looking for what I call the field of play. And the field of play really identifies where price is likely to move during the trading session. Okay, so I'm kind of identifying literally the field of play. Where are we going to be moving during the time frame in which I'm trading? And also really kind of helping to identify where's the trend going to move, the ends of the trend. Where are they going to begin? Where are they going to end? So that's kind of what I'm identifying on that perspective time frame. That's my higher time frame. Additionally, I'm also going to be looking to see which direction I should be trading in. And with that, I'm looking for what's called the trend time frame. And that's the trend direction or the best trade direction. I typically want to, I should say best, not boast. So off today. Anyway, I typically want to trade in the direction that the trend is in, because that's how you make the most amount of money. You want to capture the strong moving trends in your favor. And then I also need to focus on, when to get in, when to get out, timings on that trend. So the way I do that is I go to my zone time frame. And in the zone time frame, I find my entry and exit points, basically zones, or what we call demand and supply zones. And where am I getting in? Where am I getting out to join that trend that I'm trying to trade? So in my case, I typically look at a factor of 5. I kind of go back to Dr. Alexander Elder. He wrote a book many, many years ago called Trading for a Living. And in it, he basically said that time frames are related by a factor of 5 with a little fudge factor because, we can't always use a factor of 5. Sometimes we use 4 or 6, but we keep it close. That allows me to find related time frames, but not duplicate my work. I want to find things that are related, but not the same. So, I wouldn't use a 5-minute and a 15-minute chart. They're too close to each other. It's like looking at the same thing. So instead, I use a 3-minute and a 15-minute, or a 5-minute and a 30-minute. And have some steps in between, like 4, 5, or 6, basically. So just as an example, this is not set in stone, but if I'm looking at, say, zone time frame, trend time frame, and perspective time frame, okay, perhaps I'm using 1 minute, 5-minute, 30-minute. And I'll move this out of the way in just a moment. Okay, well, that's a very short time frame trade time frame, but then times 5 and times 6. Oops, wrong one. Sorry. But that allows me to make sure I'm looking at related time frames that are going to affect me as I'm trading. Perhaps I want to trade on a 3-minute. Again, intraday, that's fine. I would use 15-minute, and I can use 60-minute. So again, I'm using times 5 and times 4, or 5-minute, 30-minute, 180-minute. You know, sometimes people use 10 or 15-minute. You use 60-minute and 240-minute. And so on. You just keep going. Multiples of 4, 5, or 6 to get the next step. I mean, I could use 4-hour daily, weekly, or I can use daily, weekly, monthly. It's up to you. TTF is trade time frame, or sorry, trend time frame. Trend time frame, TTF right here. So I have perspective time frame, which is PTF, perspective time frame. I have the trend time frame. Come on. There, which is TTF. And then ZTF is the zone time frame. Ah, missed it. Come on. Like I said, I've got these all in notes and everything, just not for today, but I have that in the, yeah, do I ever use volume instead of time? Yes, yes, you can. I have used volume-based charts known as tick charts, and there is a video I did called Ticked Off, where I actually described how to use those types of charts, but I would still use the multiple of 4, 5, or 6. So that still is in effect. Again, it's rule-based of the way I trade. That way, everything is consistent. If you follow rules, you should be following the same rules over and over and over again, and that should give you consistent results. That's what we really need. We need to be consistently profitable in the markets. It's not good enough just to be profitable here and there. You got to have that consistency. So that way, every time you go to the market, you know you have a high probability of success. Doesn't mean you're going to win every time, but you have a high probability that you can win every time. Yes, volume, I do believe, is somewhat superior to time because the zones can be a little bit stronger. You're actually seeing where the momentum really was, where the volume picked up and is supported. Really, all of our trading is based on supply versus demand. That's it. If there's a lot of supply of something, prices are naturally going to go down. If there's a lot of demand, prices will typically rise. When you look at a volume-based chart rather than time-based, you're actually seeing how strong that momentum is. How strong is that bullish pressure? How strong is the bearish pressure? And honestly, it's definitely better. So I typically like to use those types of charts as well. But looking at this, I had the trend wasn't great. I also didn't have the best of zones because it was missing what's called the follow-through candle. It had this particular formation had a leg in, base, leg out, one new high, but is missing a couple pieces at the end there. Now, the zone that we are approaching currently, the lower blue one, because again, the upper one didn't work. And it didn't work because the trend was not great. And also the zone wasn't fantastic. This zone is better. We have rally, base, rally. And, you know, it's a good move to the upside. Now, we had good moves here with big green candles, but we didn't have enough follow through. Notice this is what's called my leg out candle right there. Okay, after that leg out candle, I should have 2 candles that make new highs. I only have 1. Right there, I have this 1 candle that made a new high, but then the next candle didn't make another high. However, if I move to this as my leg out, yeah, it's the origin of what we call the imbalance. And we're looking for an imbalance between buying and selling pressure. That's what causes prices to move. If you have tons of people wanting to buy and nobody wanting to sell, the only way those people can buy is if somebody sells to them. So how do you attract somebody to sell if nobody wants to sell? You got to make it worth their while. You have to raise your price. So what we're looking for here is a huge imbalance where we have lots of buyers, but almost no sellers in the area. Let's see, where's trying to remove that. There we go. So you notice on that leg out, after that leg out, look at this. I have a new high, a new high. Heck, I got 2 more after that, 3. I had 5 candles, each making new highs after that leg out. And even this one made a little bit higher high, I believe. So that's a big imbalance where there aren't any sellers in this area. And you can see that when prices come down to that area, we bounced. Whoops. You can see we're hanging out in the area right now because we don't really have huge amounts of buying pressure. The imbalance is kind of dying off, but we had trouble breaking through that area. And the reason why is because we had more movement, more force pushing us out of that area. Now I can change this type of chart. This is what's called a time-based chart. And the question came up, is it better to use volume-based charts? It's just a personal preference. And in looking at this, every candle represents 5 minutes of time. So even if no trading happened for the next 5 minutes, we still have a new candle. And the reason why is that every 5 minutes has to have something in there representing the price action that occurred during that time frame. And if there was no trading at all, then it would just be a dashed line, but it would still be there. Okay. Now, if you look at this area, but use a volume-based chart, so I go to custom here and I change my trading to intraday volume. Now I'm only going to get a new candle if a certain number of contracts are traded. So it's volume based. So we take a look at the same area and maybe I use, I don't know, I'll do volume 100 contracts. See how that looks. Here's the same area with 100 contracts. So let me clean this up. Okay. There we go. And going back, taking a look, well, first of all, the upper area right here doesn't qualify as a zone. And I'm still following all the same rules. This is a zone right here. And this is a zone right there. Okay. Might be a little something right here, but it's not very good. That's not really the origin of the move, but I can keep an eye out. First of all, the zones might be a little smaller because I'm using volume rather than using time. And once again, just working my way back, I'll zoom in a little bit. You'll see, yeah, consistency. We have the leg out right here. That's wrong key. There it is. There's my leg out. Notice new high, new high. I need at least 2 new highs after the leg out, and I have it right there. On this leg out, okay, you can see we have rally, I have base, I have leg out. Notice new high and new high, new high, new high. So even more. And then at the origin of this move, right there's my leg out. New high, same high. So it's missing those. This is not as good. Anyway, moving forward, you can see the upper level hit right here. And that worked. Even though, remember, my other upper level didn't work, it broke. This one worked. Why? Volume based. It's usually a little bit stronger and it has that imbalance I'm looking for right there. And you can see we bounced up to a new high, then finally came down, pushed through, and are now in the lower zone. Let's see, did this one hold? It did. Look at that. And we're hanging out in the area right now. But those two areas held a little bit better. 500 volume might spread it out a little bit as well. Yeah, it's you got to experiment to see what time frame is best for you. The higher the number, the bigger the zones will be, and the fewer you'll find. The lower number, obviously, you find more. So yes, if I wanted to, I can go to a 500 volume. It would just change the way things look. As a matter of fact, none of that is visible. The only area, as far as a demand zone, is down near the bottom there. Drop, base, rally, which is actually very similar to the trade ID I had, 6.310. Oops, sorry. Yeah, 6.310, 6.370 right there. That's the trade ID I have for today, the 15-minute. Well, 6.310, 6.31. That's up here. So that doesn't even show up on this chart. But again, if I went to a 15-minute, is that right? Yep. Now I have it right here. 6.310, 6.395. No, it should be 70. Right. Come on. There. Just different ways of looking at price. That's all. But I just need that consistency. That's the main key thing. And when it works great. You know, it's up to you how you want to do it. So, what's that mega charts? Just trying to see what the link was. So you put in. So anyway, that is again one of the things that I do when it comes to finding consistency. I use the, my rules. I have rules for all this. If I were to go to, I don't have it open, do I? Again, you can join me for that live thing, but also if I go into E-mini Think Tank, which is where I have a lot of these videos. Let's see, log in. Bring you there in a sec. Oops, wrong button. Come on, log in. There we go. Members. See, hopefully this works out. Sometimes it takes me to a weird page, and I think it's going to do that. Hang on. Oh no, it worked. Okay. Here I am. And I can go into E-mini Think Tank. So like I said, my students have access to all this information. What we have are, let's see, bonus videos. These are all the different strategies that I teach. And again, I'm going to be going over a lot of these strategies in that live session. So you actually get to interact with me and ask questions about it rather than having to watch it on demand. Right now, if you want to learn, how do I find those zones and consistently find those zones? Well, there's a video right here called Trading Routine and Finding Zones. So if you join the E-mini Think Tank, you can always watch the videos there. In addition to watching the videos, there are documents that walk you through step by step right there, base leg zoning technique. So you can download the videos and watch those as well as the documentation that goes along with it and learn how to trade properly. But I said, if you want to learn this all kind of in one, instead of having to space out over time, you can join me for that live event in October and actually work with me for an entire day and kind of see how do I go through and find these opportunities throughout the day. And it's not just in futures. I can go out to the stock market and do the same thing. As a matter of fact, if I bring up, here it is, I use Thinkorswim as one of my tools. Right now, I've got a bunch of screeners set up. So for instance, I can go in and take a look to see, okay, perhaps I want to find some bearish opportunities in the Forex markets. Well, I can go to bearish, let's see, 60-minute, there we go, 60-minute Forex trades. And now, instead of me having to go through hundreds of charts, this program has scanned all the different Forex pairs to find high quality opportunities based on what I look for in the market, one of my personal strategies. And those strategies that I mentioned are detailed right here. So if I go in the documents or the videos, for instance, on, there it is, 889 trading strategy. That's what it's scanning for. 889, I go to the document and there should be, let's see, where is it? Oh, I think it's under other strategy. Yep, 889 EMA trading strategy. So it walks you through how to find those trades. As a matter of fact, the screeners are in there too in that video. So right here, I can go through, let's see, I'm on I forgot what time frame I did. 15-minute, was it? I forgot what it was. It's Forex. Yeah, I think it was 15. So I'll go to a 15-minute chart and then click and look to see, okay, well, I might have a trade opportunity here on the Aussie CAD. So I can bring out that chart on whatever trading platform I happen to be using. I don't trade necessarily on that one. Let me see, I have my trading view open, which I can use. AUD, CAD. $15-minute. There we are. So on the 15-minute chart, now there's two ways of doing these trades or doing the analysis. Okay. What I'm doing right here is called a bottom-up approach. Okay. Remember, there's always three different time frames I'm going to be looking for. I'm going to be looking for my zone time frame, which is the lowest time frame. I'm also going to be using my trend time frame, which is the intermediate. And then there's the perspective time frame, which is the highest time frame. So I'm always going to be using those 3 time frames, no matter what it is. Now, there's 2 ways of doing this: bottom up approach, where I start with the lowest time frame and work my way higher. I like doing that sometimes because I can run scans, it's easier. And what also happens is I get to see that there are zones nearby, because there are times where if you do the top down approach, where I can start with the biggest time frame and work my way down to the lowest, sometimes you won't find any zones nearby. So it can be a little frustrating, but I could do either way and automate some of this. Is the automation for TOS then? No, it's just the scanner is automated right now, but the actual trading is not automated yet. I'm working on that. And I'm actually working right now on this platform called Omega Charts, where I'll be able to do screening and trading and pretty much automate a lot of the process to take it out of our hands, because the computer is just going to make sure they're not going to make errors. They're going to do whatever the programming tells it. Anyway, when I'm looking at this, if I'm looking for a zone, I'm going to start at current price and work my way back until I find what I'm looking for, which is a big move, kind of like this, with lots of red candles. Okay, so I have right here, definitely a big leg right there, move down very quickly. Notice right here, that's also a leg candle. Now, I didn't really go over the definitions, but to keep it simple, a leg candle closes outside the range of the preceding candle. Now, again, to learn some of these things, easiest way to do that would be go back to my members section here and watch the videos, or even look at the documentations right here. Where is it? Leg-based zoning technique. If I download that document right here, leg versus base candle kind of goes over that. So in this case, that's a leg because it's closing below the previous candle. I can see there's a lower low right there, another lower low. That's good. Remember, I need 2 new lows after the leg out. I go looking a little further left, and this green candle is closing inside the previous red. That is a basing candle. Okay, we didn't leg out right there. Right there. This one is also, oh, nope, that's a leg right there that closed below. So I got my low for the leg in. I'm not going to go through all the steps right now, but that's my high for the leg in. So that's my leg in candle right there. Got one basing candle, leg out. So I draw my zone according to my rules, the way I normally do it. Release all of the guidelines. Now, I don't do every single step like this anymore because I've been doing it for so long, but there I'm left with the quality zone. Now, I found a supply zone. The question is going to be, what do I do with that? Am I buying or am I selling? Well, again, I'm doing a bottom up approach. So bottom up, I found a zone. Now I need to know which direction is trend going. So I know, is that an opportunity to enter for short or is an exit for long? Well, let's go from this 15-minute to a 60. And I did that wrong. AUD, I forgot it was. CAD, is that the one I was just on? Aussie CAD, I believe. Yeah. So what I'm going to do now is go to the bigger time frame, 60-minute. And on the 60-minute time frame, oops, hang on just 1 second. Anyway, so it doesn't look like we've got a really good trend right now. As you can see, we're kind of choppy and sideways. So it seems like real close. I got a nice little downtrend, but looking at the bigger picture, it doesn't look so great. So I don't know if I want to trade this. That's the problem. You know, I could get stopped at any one of these stages on the bottom up or the top down. You know, so I don't have a good trend. I don't really have anything to do with that. I'm going to move on to another security. So again, I can go back to my scanner and do a bottom-up approach there, or, you know, especially if I'm dealing with stocks, I can do a top-down approach. And again, I'm going to be kind of exploring all these different ways of finding trade opportunities. So if I'm a stock trader or an options trader, I've got different tools I can look at there. One of the things I do is take a look at what's called sector rotation. So I'm going to go to stockcharts.com. And I'm going to look and I'll share with you right here a little tool that I use. Under performance charts, I can look to see sector ETFs. And this week, there we go, past week. These are the hot sectors. Now, this is how they're performing in comparison to the S&P. This is just alone, standalone, how they're all performing. I can see right now for the past week, technology did well, consumer services and discretionary, they all did well. Question is that going to happen long term, or is that just an anomaly? Well, if you understand sector rotation, which by the way, a picture of is right here, the stock market usually leads the economy. So here we see that if we're near a market peak and turning down, we should notice that consumer staples, energy, and healthcare, maybe even utilities, are outperforming everything, because that means that the stock market's heading down, the economy is nearing a peak before we start to go into recession. Okay, so we can look at this actually from not just a week, but go back about 6 months, and that gives us a better picture as to what's going on in the markets. Going back about 6 months, we could see that the only positive sector, not the only one, but the biggest one is energy, and we also have utilities, just barely, but that one's positive as well. Well, when is energy leading? Usually right at a market peak. So for the last 6 months, and we can drag us back a little bit, not including last week even. Let's see, which was it? Go back end of June. You can see energy's been leading for a little while here. And not only was energy leading, but we also had staples, healthcare, and utilities doing well. Well, when do these sectors lead? During the beginning of a market crash. So that's telling us that we're in that rotation. And if I want to look forward, that means that I probably have healthcare and utilities that moving forward are going to be performing well, because they tend to lead as we're collapsing and near the beginning of the announcement of recession. So let's say I want to look at healthcare coming up. A couple of things I could do. One, I could just trade the entire healthcare sector, and that's the ETF here, XLV, right there. So I could chart that and look for a trade opportunity. Or I can go out and look for a heat map of the market. I have several different tools I go through. So in this case, again, I can look to see, okay, what was hot for the last week? Well, we actually had a lot of consumer cyclicals doing well, communication services, and even tech. They were doing pretty well. Or I can look for last 6 months. I can identify, you can see in the last 6 months, what are the sectors that really performed well? Well, we have energy and healthcare. Okay, and remember that sector rotation, those are the ones that usually do well when the market's peaking and getting ready to drop. So I can look at some of these and see where trading opportunities might be in the healthcare industry. I can see which ones have been positive for the past 6 months or so. But I also have another tool that I've been using recently called Seasonax. I just have to log in. There's my password. If you want it, you can use mine. Just ... So anyway, yeah, there's a couple different ways you can get this seasonal information. As you saw, I've got the sector rotation I looked at on stockcharts.com. I've got FinBiz. I've got a whole bunch of different resources I could use. This one, I mean, you got to pay for it. It's not free. That's Seasonax. But if you're interested in signing up for Seasonax, let's see, copy hyperlink, put in the chat here. There's the link for it. Anyway, so what I can do now is under Screener, I can look for the last 15 years. I don't want to be in the trade too long, maybe 5 to 30 days. I can look for 85% winners, and I can narrow this down now because I pay for the extra one for sectors. And we have healthcare. There it is. So look at this. I've got one stock that over the last 15 years, it's won 13 out of 15 times. MTD. There it is. For the 11th, actually, I can probably change this a little bit. So we go from the 11th to the 22nd of July. 93% of the time over the last 15 years, that has been a winning trade. On average, it's made 3.18% rate of return. Annualized, that'd be 187%. That's pretty crazy. But that's a high probability trade opportunity, isn't it? So I started with the top, the broad market. Now I can also look to see which way is the market going to go, and it may go down. I could look to see what sector would be most likely to go down, right? So I can do that top-down approach and work my way and then find this is a sector that should be going up. But if I wanted to see what the markets are going to do, I can actually do that top-down approach. I start off looking at, say, SPX, the S&P 500 index. Go to a weekly chart, and we can see that overall looks pretty bearish right now, right? We had this big move up and a big move coming back down. So I can look at that. You throw in something like a Fibonacci on this and see, well, where are we going? We've already, CDC, we took a bounce right here at 23.6%. We bounced here at 38. That means our next bounce should be at least 50%. We're not done moving down. And I can look for any kind of demand down there as well to see where and when we're likely to bounce again. So overall, this looks like the market's still going to continue down for a little bit. Well, since I know the market's likely to continue down, let's take a look back. I'll go here at that stockcharts.com performance charts. Come on, sector rotation, and see when the markets are, when the markets are moving down like this, the best performing sectors are usually consumer staples, healthcare, utilities. So what's going to be out of favor? Well, discretionary communication services, industrials. They're likely to go down while this is moving up. Or the overall market's moving down as well. So those will be underperforming, those will be doing well. So let's go to a sector like industrials that are likely to do poorly. And we could also, by the way, look back, go back to FinViz, go back to the heat map, and again, maybe go back over the last 6 months and see industrials. There they are, right there. The industrials look pretty red for the last 6 months. Yeah, it looks like it to me. Is it likely to continue to go down? Yes. If the market's going to go down, this should continue to drop. It may not be at the bottom yet. So I see I can pick one of these stocks out of this. They're arranged by market cap as well. The size of the box is the market cap. So I can look for some of the bigger names and see, okay, we got 3M, GE, ITW, Illinois Tool Works. So a lot of big names there. Or I can go back, and this is for seasonality. This is a new toy that I just put that link up for on Season X. What it allows me to do is find, okay, over the last 15 years or so, what stocks have consistently gone down during this period of time? So I can say, okay, well, I'm not going to trade today. I might get into it tomorrow. So I go to tomorrow. I can even try next week or something like that too. But 12th of July for the last 15 years, okay, trades that last anywhere from 5 to 30 days, 85% win rate to the downside. And I need under sectors, we want consumer communications. No, we wanted industrials. There we go, industrials. Unfortunately, no patterns found. I can check the last 10 years, nothing there. We can check a longer time frame. Nope, not finding anything. I don't really want to go much below 80%. I want to find high probability opportunities. But right here, 80% winners is pretty good still. We got GE and IDEX Corp. So if I go GE, now I can see that historically, this is actually entering into a really bearish time. It might be better if we waited. You can see it says 20% winning trades. It means 80% of the time, GE has gone down over the last 10 years. Okay. Let's see if I go here though, this might be a little better to that little bottom, 20%, 80% of the time still. Okay. I can't get any better than that really, but that's still pretty good. 80% of the time from roughly the 16th of July until this big drop right there, August 2nd, we've been going down. Okay, so let's go to GE. And I did a top-down approach, right? I found that the market was likely to keep going down. I found the sector is likely to go down. Now I'm finding a stock and seeing which one would I like to short. And we can see on the weekly chart, looks like we've got drop, base, drop going on here. Identify my field of play. Oops. There it is. And where are we heading to? Looks like we got demand zone we're coming into right now, but we've got enough momentum that we should continue to move to the downside. So this is not going to halt us. We're going to keep falling. Looks like GE is getting ready to drop to about 53. Great. So then I can go down to a daily chart, make sure that trend is still intact. It is pretty good to the downside, but we got a pullback that's coming soon right here. I can see prices were moving down. Indicator was not. Well, that means it might get a little pullback. It doesn't mean the trend's reversing. It means we're going to get a bit of a pullback, possibly. Great. If we're going to pull back, that's going to give me the opportunity to re-engage this trend after it pulls back a little bit. And those are possible turning points where it starts heading back down. And I can go down to my 4-hour time frame. I did that wrong. And now look to see where would I get in. Well, I don't have a great zone here. So unfortunately, going from the top down, it doesn't always work. No great zones, no entry, move on to something else. Again, I can go back and I know that overall, seasonally, industrials should do pretty poorly right now. Communication services is another one. Let's take a look. So go back here, we can go to communication services. And I want to find high probability trade opportunities to the downside. Let's see, 10, 15, nope, nothing in the 15. Last 10 years, we got Netflix that usually drops. Let's take a look at that. Ooh, look at that. Actually, if we wait a little bit, it gets a little bit better. And it's still only 80%. 80% of the time, Netflix drops from the 16th of July until early August. And it's been about a 7% drop on average. I like that. I think that's a good opportunity. So let's take a look. Netflix. Again, start off on the big picture. Weekly chart, that looks like it's going down pretty well. Might be flattening out a little bit here, as you can see. Losing our downward momentum. That might not be so good. There's honestly no reason why I should stop here. It looks like it's going to continue to push down. As long as we don't hit a good demand zone yet. Oops, there we go. Wrong one. There we go. We'll drop, base, rally. I think we're already there though. And then the next zone down below. Wrong button. Yeah, we're already past this one. So it looks like we're getting ready to go to the next one. And the top of the field of play is right here. Now I go down to the daily. And it's not a great trend. It is somewhat bearish, but it's not the strongest of trends. And I can go down to the 4-hour chart. And unfortunately, we already missed an opportunity. We did have a short opportunity that was already here. Right there. We missed it a couple of days ago. So, oh well. We're on the right track though. So let's see what else we had there for the screener. We had Omicron, and then AT&T. So again, I can find which is giving me the right trade opportunity. And I just go through my routine and work my way through that. So, if I missed out on Netflix, there still may be an opportunity, even though I couldn't do, the trade because I would assure when it's at supply, not after it's left, there still may be a bear call spread opportunity here. I might be able to take advantage of options and sell options, even though I missed the optimal entry. So there are other alternatives. That's another reason why I enjoy the fact that I know multiple assets. I can trade options, futures, Forex, crypto. It doesn't matter. So I can look at multiple securities and find the right opportunities. Do the Qs. Oh, just the analysis for the big time frame. Yeah, I'm getting ready to do my video again, the Wendell effect. That I'm going to release that this afternoon. But with that, I'm going to be doing kind of a broad market analysis like that. But starting off with the Qs, same thing. We had a sign of possible weakness of the downtrend. Obviously, the NASDAQ is extremely weak this year, right? If you take a look back, let me just zoom out of this in a moment. But you take a look from the beginning of the year, there it is. We are down 27.94%. So we're in bear market territory here. Now we've got a positive divergence, which is suggesting we're going to get a little pullback. And that's, let me go back to the weekly here. You'll notice on the weekly chart, there's our divergence. Okay. What that means is prices were moving down, but the indicator showed that we didn't have enough momentum to maintain that downward move. So we get a little pause. Notice red and green mixed candles, that's sideways movement. That's the weakness of that downtrend. It kind of died off. Now, this is not a reversal trend. It's just a weakness. If I go down to the daily time frame, okay, here we actually have a small change in trend temporarily. And the reason why is, again, we had a positive divergence. This is one of the more powerful signs you'll get with a technical indicator. And it can work on pretty much any indicator. You've got lower lows in price, but the indicator is moving up. So even though you're making new lows in price, the trend or the momentum isn't there. And you can see that we pulled back. That's a warning sign of a pullback. Now, here's the problem with this downtrend right there. After that divergence, we went down and made this low, but the RSI didn't go below 40. That's a trend reversal pattern right there. So this time frame is telling me the trends are going to be reversing. And sure enough, look at that. It made it all the way back up. Now, the one thing, we failed to actually reverse the trend. So we're getting ready to continue the downward move. And the reason why, we ended the downtrend, but we didn't make an uptrend. An uptrend is higher lows, which we did get, but followed by higher highs. We failed to make the higher high. So since we failed to make the higher high on Friday, and now we're starting to push down, this is likely to resume the downtrend. So long term, I'm still bearish. I don't think we've hit the bottom of the markets yet. As a matter of fact, if you take a look at the NASDAQ, it could go all the way down to this 175 area on the NQ or QQ. Now, going into a trade we took this morning, yeah, unfortunately, took a bad trade as well on the NASDAQ. It wasn't really a bad trade necessarily, it just didn't work out. At least not yet. We'll see. We had two trades. This one is still working. It's still going sideways. I'm waiting. It's not going to happen until this afternoon. We're in right now what's called the doldrums, where prices typically go sideways for a while. But earlier today, I was looking for something called the opening range breakdown, where, again, different strategies I found on the NASDAQ. Actually, I'm going to switch to the NASDAQ. I'm going to leave this one alone. NQ. So now I can look at this with a clean chart. So I go back to early this morning, and what happened this morning was we started breaking down. And when we started breaking down, we ended up forming a low right here. Okay, so from 9:30 in the morning, it's pretty much right here. So that's the 9:30 candle right there. 1, 2, 3, 4, 5, 9:45. That's the end of it. So during the first 15 minutes of the day, right in that window, that was our price movement. So I marked off the candle that gave us the low. Okay, so what happens then is once we get a close below that, Right there's the close below that first 15-minute range. Once we retest that area, I usually short. And that's called the opening range breakout strategy. Again, you got to have rules that you follow to get the consistency. It didn't work today. That's all. And the reason why it didn't work, well, the trend wasn't very powerful. Remember, I showed you on the daily chart, we had that little correction. So the downward trend is still building back up. It's not really intact. So that's why this trade didn't quite work out. You can see it stopped me out. And since then, it gave us a different trade, which it's impulsing down and it's making money a little bit. But overall, it's just not very powerful yet. But the reason why this trade didn't work, again, was all about the trend. Take a look at, let's see, oh, that's 15-minute, hang on. 60, there we go. The 60-minute trend this morning. I ask you, there it is, before the news came out or the opening range today, what is our trend? When you take a look at this chart, what is our trend right now? Well, a little bit of to upside, but you notice right here, prices trying to make a new high, couldn't quite break out of prior highs, and look at the momentum, it's moving the opposite direction, right? Because the market was trying to move up, it was doing it on less momentum, we got a pullback today. As a matter of fact, if you follow me on Twitter, wait, you don't follow me yet? Oh, shame on you. No, I'm just kidding. If you follow me on Twitter, you'll see I predicted bearishness for this morning. So if I go to my profile, it's at Trader BW. You can follow me right there, at Trader BW. Okay. Anyway, you go into my recommendations this morning, it says the ES is a sideways range, is looking like it will move down in price today to stay within the larger time frame range. So what I was saying is that overall, and this was really on the ES. Oops, wrong button. There we go. Wrong platform. There we go. Symbol. I mean, it worked the same here, but overall, if I go to the 4-hour time frame and change it back. Right there, you can see that the trend is just kind of choppy and sideways right now. If I mark this off, you'll kind of see the trend a little bit better. Right there, it's sideways. If you're interested in joining me for the E-mini think tank, I can give you the link right here. I put it out a little while ago, but I'll put it out again. It's not a problem. And let's see, you can use this one. I think we have a lot of different links for different classes, but if you're interested with the E-mini think tank, you can try it out for free for 2 weeks if you do quarterly subscription. If you click on the quarterly subscription, the first 2 weeks are free. If you cancel within those first 2 weeks, we don't charge you. But anyway, right there, you see this NASDAQ is sideways, right? Oh, there you go. That's the other link too. So it's kind of choppy. And then when I went down to 60-minute time frame, what I saw early this morning, let me get rid of that yellowish, is the same thing. Prices tried to make new highs, but the indicator wasn't having it. It started dropping. So I thought the first thing, when the bell rings this morning, we were going to sell off. And sure enough, there's your first candle of the day, selling off, correcting right now before we sell off again for the end of the day. So it's predictable, again, just by the normal routines and what we look at for price. So anyway, I got to wrap this up. I was only supposed to be here till about 1 o'clock, so I got to take off soon. But I want to thank everybody for being here. And as you can see, I have certain routines and things that I do on a regular basis because that's what produces consistent results. And that's what we're trying to get in the markets. We want to be able to go to the markets on a regular basis. We're not going to win every time, but we want to have consistency. We know that we do the same things over and over and over again. Now, there's a lot of variations every day. The markets are almost never the same as they were the day before. So it adds a little more excitement to it. But overall, even though it's not the same words, it rhymes. Let's put it that way. So we can, by having consistency in the way we do things and having plans in the way we do things, we can have very similar results. And if those results are good, we want to make sure we keep having those same results over and over and over again. So I want to thank everybody for being here. If you have any more questions, keep it to yourself. I don't care. No, I'm kidding. If you have any questions, let us know. You can always reach me at support@wealthbuildershq.com. Thank you. Happy trading to you too, Brenda. Thank you for being here, everyone. Stephen and everyone else. I appreciate you being here, Gary and Ken, Kevin. Let's see, everybody. No, I'm going to miss somebody, but I want to thank everybody for being here. Again, you can visit me at brandonwendell.com. You can also email us support@wealthbuildershq.com. Would love to see you in New York, like I said, Long Island in October. If you're interested in meeting up with me for the week, or not the week, if you want the week, yeah, we try that. But no, I'm only going to be there for a day. The October 27th, all day. It's an opportunity for you to be there for the day in the life of an online trader. And again, learn more of this, and you'll be able to take a book home with you that has a lot of this information in it. So that way you can start building your own rules, your own plans to make your own consistency in the markets. So I want to appreciate everybody. Thank you again for being here. Take care, trade safe, trade well, everyone. I'll see you again very soon.